with local stakeholders who can then provide you with those trusted access to their own networks and increase the likely acceptance of the market of new technologies that are locally owned and funded as well as in Australia and internationally. In many cases, and I'll talk through the types of investors, some of these investors actually bring quite a lot of project expertise and capability to help with that strategy for commercialising here as well. Next slide, please. This is a broad overview of how I break down the Australian capital markets. You've got investment size and the placement on here is obviously quite variable. Some family offices can write as little as $25,000 checks and some will write $25 million checks. So it's quite a variable, but this is an approximate location on investment size against what I call level of strategic interest and support. So obviously accelerated corporate venturing or strategic investors are going to invest a lot of time and effort in supporting supporting a project's development and commercialisation, along with venture capital, high net worth, well, but retail investors, an IPO or an institutional investor, they're largely leaving you on your own to business together. Next slide, please. Right, next slide. So as it relates to what I think is probably the more interesting part of this for new companies establishing here is the life science venture capital private equity space. I think these are just a list of fund managers with more than $100 million who have appetite of committed capital with appetite for life science companies, defined reasonably broadly, and family offices. Each of these have at least $1 billion under management. So, and certainly Newburyport has relationships with most of those, and most of those have been invested in projects that we've supported over the years. So we'll go to the next slide, please. So as it relates to the ASX, there's 181 listed companies in the life science space with 250 billion in market cap. What I think makes this quite interesting is if you exclude CSL, which is about 2/3 of that, the rest of it shows a really strong interest in that mid-sized company. There's 110 companies worth worth less than 100 million, and 70 worth more than 100 million. And if you look at an exchange, as I'll come to, like the NASDAQ, anything less than 100 million, you're just too small to get much attention by the market, by brokers, by research, and liquidity, and you can drop off the radar of the markets. Whereas I think, generally speaking, there's a reasonable degree of liquidity and interest in that mid and small cap range of the ASX. I think clearly the evidence of so many companies in that sub $100 million market cap, which is where a startup or scale up or company that's really just invested in clinical validation, regulatory, and now launching through an IPO for funding of business development is going to, you'll inevitably find yourself in that range at your IPO. It's rare to get a more than $100 million IPO away in this market in the life science space. And I'd probably point out that a large number of those are actually pre-revenue listed companies. So the market's reasonably sophisticated at assessing underlying technology value. Next slide. As it relates to comparison to the broader market, this is a 10-year chart. You can see that clearly the life science sector and healthcare sector in Australia has massively outperformed, and that's probably why there's, despite the market environment, a reasonable interest and level of sophistication in the sector here. I actually did this chart over anything from 3, 5, 7, 10 years, and the chart is the same. It doesn't matter what profile you take. The growth rate's always been stronger. Even 2 years, it's still been outperforming despite the tough environment. And you look at that and you can see that notwithstanding a pretty adverse last few months, it's still, or last year, it's still held up reasonably strong. I would probably note that CSL as a big chunk of that index probably had an outweighed influence on that number. Next slide, please. So as it relates to the ASX, the eligibility criteria are really simple. $1 million profit over the last 3 years, including 500,000 over the last 12 months. Or what most companies in the life science rely on is the asset test, which is a $5 million NTA or $15 million market cap and $1.5 million working capital. Now, there are quite a large number of unwritten criteria that the ASX likes to apply to things. So having advisors that know exactly what is going on, and whether it's someone like James or someone like a group like Newburyport, there are unwritten considerations such as a growing desire to see relatively more advanced business model for clinical development exist. It's hard to get an IPO away of just a good idea. The exchange is increasingly wanting to see human trial data or evidence of business model development. There are other criteria. You have to have more than 500 shareholders and 20% free float on the share register. They have a preference to see a majority non-executive directors, one of whom must be Australian resident. But that said, as long as there's a pathway to that, some of these things are somewhat manageable if you don't. As a rule, it'll cost about $500,000 to $1 million to complete an IPO in a sort of a, let's say, a $50 million fundraising. That's direct costs of advisors as opposed to the commission and fees on raising the capital. And your ongoing governance costs are anywhere between $300,000 to $500,000, potentially including one or more non-executive directors. So it's not an incredibly expensive exchange to remain compliant with. Next slide, please. So this is the traditional fundraising journey for many startups, particularly in Australia. Starts with funded by universities, grants and sweat equity. You might get friends and families, then angel, VC, IPO, public markets, where Newburyport really specialises is in that latter stage. And particularly many of the projects that we've advised on are from countries like Singapore, like Israel, or like China, where there's a huge amount of IP and limited sophistication to take that to the international markets. So next slide. That's sort of where we've found our specialisation as well. All right, next slide. A brief case study. This is an Israeli piece of IP that is in Spirit Technologies. They've developed some quite novel medical device technology to provide essentially oxygenation of the blood for people with respiratory insufficiency. It's ambulatory as opposed to, so basically an ambulatory heart-lung machine, which is quite an incredible technology. We identified that technology, raised at first a $3 million seed raise, a bridge loan, and then a significant convertible loan safe note as a bridge to IPO. For a variety of reasons, the company then chose to appoint a different advisor to Newburyport and list on the NASDAQ, where they were promised a $50 million market cap, whereas we were talking about $1 billion Aussie dollars. So 50 million US, they got greedy, went that way, and I'll show you what happened. The share price, next one. The share price, they listed at $5. It trended down over a long period of time. They announced a really good potential distribution deal, which didn't have a lot of, but otherwise not a lot of news flow. The market spiked. In the US, they didn't have a great network or strong advisors in the PR and support of liquidity and other things. And if you look at the next slide, it didn't last. And it's still today trading around that $1.70. So I think what it highlights is that even though often the US brokers will promise that it's the land for startups, level of appetite for earlier stage preclinical technology, the level of liquidity that exists there and really that after listing support is not always really what companies need to keep a solid backing of the stock on the market. Whereas in Australia, as I highlighted, there's much more interest in some of these preclinical projects. There's a lot more closer connection to a lot of the investor landscape, and you can maintain a stronger interest in the stock and perhaps not suffer such a dramatic decline. At this valuation, it's actually trading less than the cash backing of the stock. So the market's saying the management team are going to destroy more value than the company's worth. So, but fortunately, they do have enough cash to fund several more years of development, and the hope is that they will achieve some of the key milestones in clinical trial development and human trials, and it'll get a re-rate then. I think, next slide, please. I think that really highlights the benefit of having really trusted advisors around an organisation, which enables you to really address these issues and advise the company effectively. So these are all organisations that we've worked with very closely, and we're always in each deal finding new groups and new partners that really support, whether it's tax, advice, OSEC, CFO, legal, recruitment, and so forth. So they're groups that we've worked with closely on deals in the past, and I think it's really important in setting up an organisation for a commercialisation joint venture or venture funded in Australia, is to find those trusted partners that you can work with who really share the vision and understand what the goal is. Next slide. So in conclusion, I think there's quite a wide range of investors from relatively passive to relatively active who are able to support commercialisation of technology in Australia, and that when paired with really capable management teams. I think it's critical to have a seamless team of trusted partners who know how to work together. Things don't slip through the cracks, and those long-term partnerships can maintain and create value. I'd highlight that the ASX remains a pretty attractive venue to raise funds and deliver liquidity to investors, and it's certainly a well-respected base for organisations to launch a global go-to-market strategy from. And like Jason, I genuinely believe there's a lot of opportunity for win-win partnerships between Australia and China, whether it's investors, advisors, or ultimately the people and the public who benefit from the vast amount of medical technology that has been generated and is going to help people in their lives. Thank you.
Watching James Sutton. So it's my pleasure now to introduce and
Attention, please.
and the head of
This is the chief warden. Testing of the emergency warning system is about to proceed. This is the test only. I repeat, this is the test only.
Let's go on mute.
There is no sound.
Okay, guys, we're back.
I do apologise to our guests online, so just finished our fire. So we'll resume now and I will reintroduce Jane Hutton from New South Wales. And thank you very much for your understanding.
Thank you, Virginia, and good afternoon, everyone. Today, I want to briefly outline our firm's perspectives on climate sciences environment, both legally and from an industry perspective. Both from a legal and an industry perspective, and you won't hear any disagreement about there is an array of ingredients that are ripe to make a continuation of successful bilateral MedTech transactions between China and Australia in both markets. At a previous forum, I've previously highlighted a successful case study where China Grand, our client, invested in a co-investment licensing deal with Telix Pharmaceuticals, which is listed on the ASX, and talked about why that was perhaps a blueprint for cooperative bilateral investment. But there are many other examples, and despite the pause, shall we say, in relations between Australia and China, which to our experience and direct daily knowledge now is really thawing out at a rapid rate. We see there are significant opportunities for a return of successful deals and investments in the short and long term. I won't do a slide about me, but I'll do something just quickly on Mitchell Ellison. We're the largest independent law firm in Australia. But we've been, notwithstanding that we base ourselves in Australia and New Zealand, we have been strongly committed to the China and Asia region. We've been continuously in China for over 20 years and consistently ranked amongst the top legal advisors to Chinese clients investing in Australia. Particularly, we have our own dedicated healthcare group, which brings together all the disciplines from across the firm, and we cover all the major healthcare sectors, including tech. Talked a bit like different statistics carved different ways, but the Australian life science sector is important. It is growing. It employs a large amount of people. It's expected to continue to grow in that regard, underpinned by both public and private investment in research and development, where we built above our weight, so to speak. There's been focus on the listed environment, and I think that's an important part as well. But interestingly, of the life sciences sector, 86% of the sector are small, medium enterprises, and a lot in the private sector as well. Slide, thanks. As I said, in terms of research and development in Australia, we, for a small country, are well up in the rankings, both in terms of number and how we are perceived and accredited at both at the university and the medical research institute level. Partly that has been underpinned, as I said, by government work. We've talked about the R&D tax concession. I'll mention that again in a minute. But at both federal and state level, there have been some great supports to underpin the business sector and investment. So, as I said, investment particularly in the R&D area has increased every year for the last 7 years, including obviously through COVID. Australia is certainly becoming on the radar of both multinational and SME companies from across the world, in particular Asia, and as I said, we're seeing a renewed focus from China as well. We all have the same common factors, whether it's those that Jason outlined in terms of the drivers from China, ageing population, a real drive to innovate both in device and drug discovery, and of course the ever-present movement from governments trying to move the developments in healthcare and delivery of services from the public to the private sector, and I do not see any reason, even before COVID, that these things are not going to drive investment into the sector for decades, if not longer. Slide, thanks. Just quickly before I into some legal comments, key themes we're seeing in Australian life sciences, because I think it's just important just to pause a little bit on standing. But probably no surprises. We're seeing an enormous amount of interest and investment in AI, data and software applications in health. That's driving changes in the type of workforce we need in healthcare and research and development as well, which is a development in its own right. The development and rise of biologics and biopharmaceuticals has happened very fast, and the whole landscape of moving from, in my work time, from originators to generics to the prevalence of biologics and biopharmaceuticals, and the wheel turning is making the area dynamic. Across the world, Australia is no different. Supply chain congestions, a lot of consolidation in different areas, particularly in Australia recently in the retail sector of health. That will continue as well. I've mentioned focus on growing the talent pool, and that's a worldwide phenomenon. We're no stranger to that, but we are underpinned by a very good education system, and that itself needs its own investment. Continued need for capital, like others talked about that in Australian companies, are no stranger there. Again, worldwide trend, but again, Australia at the forefront, sovereign manufacturing capability, obviously seen, particularly here in Victoria, deals with Moderna, out of Monash University with vaccine production, but there are lots of other manufacturing capability deals underpinned by government support that are in the wings, and M&A collaborations, partnerships will only continue at pace. Slide, thanks. So, point on this is a pre-COVID slide, which obviously shows that healthcare came a very distant third in terms of Chinese investment in Australia. But I like to show this because I think that just shows the enormous growth potential for healthcare investment into this country, and where, based on those prior slides, I think those opportunities are. Slide, please. So look, we've seen coming to what we're seeing at the moment, based on, I'll call it the pre-COVID and the pre-frostiness of relations, to put it away, between Australia and China, which is thawing at a rapid rate. We're seeing a resumption of two-way interest. Clients both from China and Australia are very active in discussions, and we expect this to only increase as the weeks and months go on. From an inbound perspective, as I've said, regional investors, trade players remain attracted to the quality of our scientific research, know-how and potential clinical outcomes. We've seen deals both in the private sector and close here to home at Melbourne University and Monash University, with university partnerships with Chinese companies. So I go to what Jason said earlier. It is a very much a two-way street. It's not all just about bringing the research here, but it is to an extent, because it's mutually beneficial, because that research can be, whether it be clinical trials, can then be turned back to being used with the FDA or the EU. And yes, we are a lower hanging fruit in a sense, and easy to learn from mistakes, and our tax system helps as well. So particular areas that we're sort of seeing, or subsectors around medtech, regenerative medicines, things specifically like stem cells, interest in acquiring or partnering with CROs, clinical research organisations, clinical trial services companies and diagnostic companies. And as I said at the last forum, the template to my mind is not necessarily outright acquisition, although that's fine to an extent, but partnerships, collaborations, that win-win is going to find both from a regulatory and I think just a general business and encouragement perspective the best formula going forward. Next slide, please. So I'm just going to quickly go through just a few legal slides, as you'd expect. Just surely to say, setting up a company here in Australia has always been and will continue to be actually a very easy thing to do in terms of whether it's setting up a subsidiary company or a branch office. The requirements are minimal from a time, cost, and materials perspective. There are some additional things for R&D, tax rebate to attract those, but to set up and get going in Australia is quite easy. Next slide. Look, on FIRB, first of course, every country has a foreign investment review policy. And there's been a lot of focus on Australia and China, but again, anecdotally, we're seeing very much a freeing up of that process from a number of perspectives. I would say in MedTech, though, a couple of things. We do have a new critical sensitive sectors regime, but that is very targeted, particular infrastructure areas such as vaccines, acquisition of hard infrastructure such as hospitals. Well, the overwhelming majority of MedTech investments coming into Australia are into either free trade agreement or just the very high thresholds. Unless there is commercial real estate involved or foreign government ownership from the China side, the overwhelming majority of investments, you need to check it off to make sure you're safe harbours, but the safe harbours are extremely broad. So I don't want that to be seen as a rate limiting step when companies come to look at the trade. I just don't think in practice that's the case. Next slide, please. It is worth dwelling on, again, some advantages about our system, our legal system, particularly here, about the robustness of patent protection and other registered IP. We have a common law system where there are routes to go through for protection of non-registered IP, such as trade secrets, know-how, and confidential information. Again, we do have some export controls, but no different like we do in the country. The countries have that to some extent. So, from an IP perspective, good place to do business. Slide. In our therapeutic goods regulatory system, I won't dwell here other than to say it is a long tried and tested system. Jason just made the very good point that it is a great testing area for and beachhead for companies to get their products through the regulatory system. We are seeing increasingly the FDA and the EU accepting either totally or with what I'd call customary conditions or perhaps sensible add-ons to trials, a greater acceptance of Australian clinical trials, and the clinical trial here experience is a good one. Next slide, please. Clinical trials, the same points I've just been making. When you can combine the prestige and the breadth of our medical research institute and universities that we have here, with the regulatory pathway and some of the more specific characteristics that makes conducting trials here a lot makes sense, which I'm then going to probably, I suspect the next slide is on R&D. These slides are available for all participants afterwards, so I won't go through this, but the key thing here is this is intended to benefit both Australian and foreign companies and attract investment into Australia to get research and development done here, which can be leveraged here and around the world. As Jason said, we're one of the few countries in the world that actually pays you, in effect, immediately, cash in hand, at the smaller end of the market, with refundable offsets for good faith research and development that's conducted here in Australia. For large companies, you can get a offset, but it's at a later date once you start earning money. But the sub 20 mil category, and that's category in terms of turnover, not amount spent, actually covers a huge swathe of particularly startups and SMEs coming into the Australian market. And it has been designed, as I said, for offshore companies to come here within certain parameters, which are not unreasonable, or in my view, that onerous to set themselves up as a company and license their IP down into Australia for the purposes of this R&D. So, there are a few firms in both legal, accounting, and other firms that specialise in this area, but it is an important underpinning of the system. So, the last thing I just want to acknowledge, again, it's been touched on, is both the Victorian government and Commonwealth government supportive sector. I agree, being parochial, that Victoria has long been recognised as the home of biotech. That's not to say that other state governments aren't now, spending and committing support into the area, but Victoria has been a leader for a long time, and I think that's paid off at various times, and government support at all time, by both morally and financially, and as well, that's underpinned as well by the Commonwealth government, and all of that supports the ecosystem. So I commend government for this. Pretty much.
Thanks very much, James. Running slightly behind. So I'd like to just quickly introduce our panel, and then to start the panel discussion, we'd like to hear a couple of quick stories from. So I'm sure you'll be interested in personal stories. So the first panelist I'll introduce is Kevin Chan. Kevin is BGI, Beijing Genomic Institute, based in Shenzhen, so it's a little bit confusing there. And we've got also Professor David Anderson. Professor David Anderson has an honorary role in Burnet, been in Burnet many years, and then now setting up his own company with a partner, Nanjing Deshu, a biotechnology company. Online, we got Tim Lee. Tim works for the Shenzhen Economic Trade Office, and then we have Amanda as well joining us from Accurate Medical Communication. So I'd like to start with a couple of quick stories. So maybe we'll throw out to Kevin. If you can please talk about your story in terms of BGI, your journey of setting up a company in Australia. What things it was easy for you to do? What sort of barriers you face, and how did you overcome that?
Yep. First, as you know, that BGI, headquartered in Shenzhen, right, and they established themselves right here in Australia in the year 2016. Yep. So from that point onwards, we tried to reach out to the Australian, because our head office is Brisbane, QIMR building, and we developed and established a laboratory in provides all services in terms of genomics, the Beijing Genomics, genomics company. So all genomics products and genomics services for research. For example, Monash, we high, and all over in Australia. And to a certain degree, we also embark our journey right up to the side of things. We quite a lot of the COVID in these kids, and right now we are still looking into the rapid antigen. So for me, I started off 2 years ago, as a business development manager. My task is revenue and ongoing and things for BI. And I think that during my time, I feel that there's a strong connection too, because I'm Chinese, and in the way that this is my first company, first Chinese company that I work with, and I've got a lot of respect for this. How we proceed with marketing and sales activity. So there's a couple of things that when we first started off, it wasn't, that there's a lot of hurdles that we need to. One of them is to create a way. I always find that this is not that, but a lot of customers, that even the customers that I've known before, right? There wasn't a way of, they always wanted something local, and to promote, our services, is somehow limited in a way. But we managed to go through all these by like going trade displays, looking at connecting with all the key opinion leaders, like what Jason mentioned, just the right connections, assisting them with grants, because I work closely with all the researchers, investors, and and we established a really good network within that group. So since right now, currently, I think that we have came to a point that a lot of our researchers and they know about BGI, when we mention the name, and we just have to keep on continuing, educating, providing the right necessary tools for them to understand how we can these projects and by their. So for me, I feel very proud to be able to extend this relationship and continue to assist and continue this journey with GI.
Yeah. Okay. Thank you, Alvin. Thank you. So now we'll turn to Professor David Anderson. Now, David, you gone the other direction. You've set up companies in obviously Australia, Western market, but you also set up companies in China. In fact, you've got to set up new one again in China. So if you can please share in the next 5 minutes or so your story about setting up a company.
Yeah. Thanks, Jason. I'd actually like to go a little bit further back than that, because to a number of comments and very much echoing. So I've been collaborating as a scientist with fellow scientists in China since 1982, when I started my studies in Fairfield Hospital in Bilateral, and very much supported by the Victoria Joint sister state relationship with many scientists. It's clear to me that China had fantastic science held back by lack of rules. But in terms of scientific thinking, critical scientific method, Chinese science was always great. So it is no surprise to me that now that economic barriers have come down, that Chinese scientists, Chinese science is world's best. BGI is undoubtedly not just the biggest, it is the best genomics work in the world. I could have had the photo of all of the cover photos from Nature and Science. So for me, it has always been a no-brainer role that China is a good place for me to collaborate. And once economic activity in China got to a point where actually working to develop companies and do manufacturing there, my particular area of interest being point of care diagnostics and global health, China was the logical place to go. We can talk about sovereign manufacturing capability. I strongly support it for many things, but not actually the area that I work in, because it's hard to have a sovereign manufacturing capability where it's built on low-cost raw materials that are all produced in China. So you're really finishing products here. Yes, in one particular sector. And so in the starting around about 2010, as Deputy Director and Head of Business Development at the Burnett, I felt that we really should look at how we could have a win-win Burnett Institute commercial partnership in China to develop and manufacture and sell point of care tests. One of the things I found difficult coming from the Australian end was where to go in China. China is huge. China, so many places that would be good to work in. And together with a group of people, some of whom went through Victorian government-sponsored trade missions, a group of us got together and settled on Nanjing. Let's try and set up something. I was fortunate to be introduced to my now business partner, Dr. Yu Feng, who we set up a company as a wholly owned subsidiary of the Burnett Institute called Nanjing 5-Point Diagnostics to set up a GMP facility in Nanjing, co-developed diagnostic tests and others that were licensed that Burnett had previously developed. And the thing that has been an overwhelming success there has been the strengths of relationships and that commitment to a win-win philosophy, very much helped by the fact that he has been able to spend very significant parts of his time in China and not only setting up and running a manufacturing facility, which is part of his special background previously, but the relationship management, because as someone made the point earlier, business in China is all about relationships. It's not about contracts. I actually personally really like that. But it does mean you have to work on it. You can't go back to a relationship, to a business relationship 5 years later and say, oh, here's that contract. And so it has been very important to have that personal relationship, which I certainly support as much as I can by eating and drinking much when I think maybe you'll thank me. But ultimately, the Burnett's venture did not succeed because we could not get follow-on investment into that company. But we were a technical success. We have one product that has CE mark. We have 2 other products that have ISO 13485 certification. Work really well, that published very well. But without further investment, and Burnett was not didn't have the appetite to invest in a company in China, couldn't get to the point of actually having market development, and then COVID is still more difficult. But our real problem in attracting investment was that we were trying to run a for-profit company with a majority shareholder who was. That was a very hard thing to explain to potential investors in China because not-for-profit research institutes essentially do not exist. Certainly not well known or do exist. In China, you were either private or state-owned or university. And we were something else. And it has never been a problem for willing collaborators. People love collaborating with us. There's a big difference between collaborating in science, in medicine, and investing millions of R&D. And as a result, Burnett ended up shutting down 5-Point last year, cutting himself from the complicated legal underpinnings of that. But everything we set up, we feel has enormous value and potential, held back by that inability of Burnett to really cement the investment going forward. And as a result, Mary and I very much led on the ground in China by established a new venture called Nanjing Diagnostics, which would take off where Bio left off, subject to licensing technology. Negotiation at the moment, but with Chinese investment into that privately held, purely for-profit company, still with a commitment to global health, but being able to really take on the Chinese market first instance, and for some products, the global markets. We certainly don't see any lack of appetite for that kind of, but very much recognising, as the previous presentations addressed, Australia being a fantastic entry to the Western market. So when we have a product, for example, for point of care diagnosis of sepsis, which hopefully will be in about 2 years' time, take that to the West, we will come back to Australia. Clearly the best place to do that validation and market entry work. But Chinese market, we will develop those, essentially further developing that I've had over the last 40 years and fairly similarly. And you know, I just think that anyone in our space who is not looking for bilateral relationships with China is crazy. And so I'm always very pleased to support those. And just one final comment, I haven't spoken, but further to Kevin's point about people wanting local partners, I have quite often had people say to me, oh, you know, it's all very well working with China, but we really work in our area. That often means working with GenScript. GenScript is about half an hour from our facility in there. They just have an office in America. Quite happy working with that company and expect the fantastic quality that GenScript delivers. Hardware in Beijing is named. Yeah. But you know, that is something that people have to overcome. But I think that that is going to change. More of these good win-win relationships that can be widely publicised.
Thanks, David. Now, we've got 20 minutes left. Well, I'm going to bring the remaining two panelists, just ask one question each, and then I'll open up the remaining time for the audience ask any question they wish. So, Tim Lee, now, David has mentioned where to go in China, right? So you're representing Shenzhen. I want you to talk about Shenzhen government. What do you actually help? I mean, not isolated Shenzhen, but other government do that too. But use that as a case study to say what Shenzhen government do to help, you know, foreign companies, especially innovative foreign companies, to set up in Shenzhen. So if you can talk a couple of minutes on that, please. You're on mute. Tim, you're on mute.
Okay, sorry. Thank you for your question, Jason. Yeah, for the Shenzhen government, we got a lot of the supported and preferential policies for the companies invested from the overseas, and up to the 2021, we got. Let me have a look. Yeah. We got the Shenzhen Municipal Government-led fund has just reached the $25 billion, including the China's largest government-led fund, namely Angel Capital Guiding Fund, that has reached the $6.5 billion. Yeah. Moreover, Shenzhen Capital Group has invested more than 1,000 companies, and including 150 listed companies. That is to say, the Shenzhen's municipal government is provides the great and the practical support to the biomedical company investing in China, investing in Shenzhen, and it's just for example, Shenzhen is the hub for the innovation in biotechnology and digital health, and a home to many startup and innovative companies, especially in the biomedical and biotech industries. Yeah.
Okay, thanks, David. So Amanda, you're in the space of helping Australian company to engage with China and Chinese company engage with Australia. So Tim and David also talk about going to do business in China. If a Chinese company come in Australia, what's your advice for them to be more successfully established here?
Yeah, thank you, Jason. Maybe if you can allow me to take it a little bit. I thank you for all the finding with Chinese. So at the end of the day, whether like current establishing companies in Australia or like David and Eve establishing companies in China, eventually it's communication. And then we also talked about culture, legal, and all those things, they come down to communication. Because whether it is here and there, and then it's communicating together. So actually, our service is basically like Australian companies or Western companies doing business with Chinese companies, like meet where they are. So can we rephrase the question a little bit? Like not Chinese companies here, but Western or Australian companies doing business as they are.
Sure. Okay, thank you for that. Is there any questions from the audience, both obviously physically here and online? Charles.
Thank you, Jason. I have a quick question. One of my they represent a pharmaceutical company. They want to do clinical trials in Australia. Who should we talk first?
I'll throw that question to David.
But in terms of the actual conduct of the trials, this network certainly, but not the only trial coordinating. But I think it's certainly now with the places in the across Australia. And then there are a number of companies who can do the supporting work beyond just putting your drug or biological into patients and taking samples. What was 360 Biolabs that was established in partnership with some help from me some years ago being one, but others yes, many companies in Australia set up to support what is a very strong industry in Australia. So supporting of trials. And one of the things that didn't really get mentioned in terms of how competitive we are for doing clinical trials is how easy it is to get approval to start your clinical trial through the clinical trial notifications. Okay. Essentially, with support from, for example, the Nucleus Network, finding an academic medical investigator who is interested in your field and is prepared to essentially sponsor the trial and saving probably 6 months in getting a trial off the ground compared to any other Western university.
And if I can also add something, because I think, yeah, it's very good mentioning about Nucleus Network. There are some other CRO companies, like I think I see some names like Green Light. That's also one of the CRO companies here. But then also there are some clinical trial facilities from there. So we have the CRO clinical trial facility. So, and also in terms of the therapeutic area, because they can be pharma, biotech, medtech, or medical device. So it's also very important to ask them to see the activities here.
So there is also, St. Vincent's Hospital in Melbourne offer a bilateral service. So you can actually get pretty tailored service if you want to do a clinical trials through that channel. Sorry, is there another question? Oh, yeah. Looks.
My name is Lewis. I'm from we started stepping into biological. It's a very tough one. Great. Now we are representing investing IBP instead of two jobs. My 10th day in. So my question is, because Hong Kong's some we have massive money, so we can solve the administration hustle, the red tape. We can't stop the people out of distraction to make the next development. So is there any, I guess, that between points about the academic side, the talent.
So are you talking about having human resources in those companies?
Commercialization, like putting the research center right here to support them. Yeah, just Singapore, China, and America can drive by commercially. In China, they driving from academia. They started learn to Singapore model, starting from two. And Shenzhen also learned from Singapore. So Singapore is basically government talk. So academia here, because I think at the time zone, the travel, 9-hour flight to China, I think it's a good place. But research center, we don't actually worry about money. The research talent, not the operation, not the commercial anymore.
Let me try to answer that question, and then I'll throw open to David or Michael and James and answer that question. So first of all, Australia is very supportive in terms of R&D, right? So you can say the R&D tax incentives, basically every dollar you spend, you get $43.50 back. So that's pre-tax. Before you generate revenue, you get that money back.
Yes.
So in fact, Michael and I are working on a project.
Many thanks again for the collaborative exercise
R&D center for that
between.
purpose. There's also a lot of talents. In Australia, in Melbourne, for example, there's high concentration.
You found the text email from Shandy.
But it's all very highly ranked globally in R&D output. These universities are very open to have collaborations, not mention of all the independent research institutes David represent. Brennan is one of those. And then all the other periphery work, CROs, we talked about your CRO before. Biodesign, so bioengineering design, there's a lot of company to do that. So there is the ecosystem here to support our R&D center. And then I'm sure a colleague like Stuart from Victorian government would welcome a lot of investment in setting up R&D center. You can talk to the Victorian government.
Let me know.
Previously, I was with the Victorian government a long time. There are many supportive schemes.
Availability next
For
week.
example, recently set up a fund
Revert back.
in breakthrough
Revert
fund.
to thinking accordingly. I hope we can have
Hello?
We focused academics. We have a lot of very good academics who pay lip service to commercialisation and translation. And having actually run that aspect of my own institute for about 10 years, I was continuously frustrated by people who would, we want to do this, but first we want to get paper in Nature. And that's not what you're looking for. And so I would say that you need to really be careful, have people who have a genuine focus on translation, not just, we need to add that to our CV. Certainly count myself in that camp of people who are genuine about it, and there are many others, but there are very, very many academics who just want to be academic. But I absolutely agree that it is a good place to set up a research centre, and Kevin, best place to comment on that part.
think that, you know, in Australia, the way I see it, I approach a lot of customers. Based, both of them are private investigators. I think that they always embrace this kind of funding is one thing, but there's a lot of things that can. It's very, how do I say, it's very kind of good in a way to obtain the necessary funds sometimes, right? So I collaborating with partners, just like to be able to get always very open.
Thanks, Ivan. We'll go. I'd like to ask one more question online. I know a gentleman put his hand up earlier. So if that question, we'll have one more question, and then we'll probably need to call time. Is there a question online? Question online. Was the gentleman with his hand up?
Igor Gonda. Like they're not there anymore.
Hello, yes, I'm here. I was just muted. I wanted to ask a question. Are there any limits on moving cash for investment in the life science sector from China to Australia or from Australia to China?
Yeah, thanks Igor for the question. I know the answer, but I think I'll throw it to James.
Generally, from an Australian regulatory perspective, the starting position is that there won't be any material impediments. You will need variably, obviously, to set up an Australian bank account here, which can be a little bit time consuming, but beyond a little bit of admin, there are not material exchange controls that you might see in other.
Thanks, James. I think I'm afraid that's all the time we have. I'd like to thank our panelists.
Second? Yeah, second. Yeah, I just wanted. Remember, for Chinese companies, silence is not agreement, because you need to proactively prompt them to have a discussion. Because then if you think, okay, this is silent, always good, but it's not, because then they have questions they didn't ask you. So I think this is general just practice that I wanted to say before.
Thank you very much. And on the note of silence, please put applause to us.
Michael. Jason, our moderator. Thank you for leading. Honestly, our members, so they have access. We've heard today Melbourne is globally recognised by technology, pharmaceutical, for significant opportunities years that trade investment. Hope today's session guide you and empowered you to take the next step in global Victoria, ACB and ACBC. So please reach out if you'd like any further. Our guests online, thank you for attending virtually and for persevering with some of the technical glitches. Please keep in touch with us and reach out if you need. To our guests here in the room, thank you for attending. It's like so many friendly faces around the table. Please remain for networking. Encouraging everyone who's present today who are not members of ACBC to please sign up via our website and take full advantage of many activities. Thank you again.